In today's video, I wanted to do a Trading212 portfolio update because everyone seems to love these and they get views. In all honesty, that's just what we're doing here. So let's get into it. So it seems like every time I do one of these, we've had a mad old month, and it has been a mad old month again. It's been up and down like those things go in the strip club.
Up and down, like strippers' booties go.
But moving on from that joke, I say that too often. Even with everything going on and the new investors wanting to get involved in investing, Trading212 still haven't sorted out their sign-up process. So what is going on, I still don't know. Hopefully we'll hear something over the next few months or weeks, fingers crossed. But for those people who can't get a Trading212 account, then you can get a free trade, and there's a free share link in the description if you want to do that. And as always, before we get into it, I'm not a financial advisor, I'm just a random dude on the internet, not in a donut t-shirt, in a black t-shirt, because I got quite a few compliments about it. So I'm gonna stick with that for a few weeks, see how that rubs off. But yeah, I'm not a financial advisor, so just please do your own research before investing your capital. So as always, we start off with the biggest losers, and we actually have a new biggest loser, and it is in fact Surface Ecology. So this is the one, this is a Cathie Wood inspired one, ARK Invest inspired stock. Surface Ecology have been there for a while, and they're now 17.45%. Admittedly, there's only 15 quid in there, so for me, it's not really material impact, but what are you doing, guys? To be honest, this is a long-term play, and I will continue investing in them. They are developing therapies to combat cancer, so I think I said previously that if it doesn't work out, I'm still helping the fight in cancer, and to be honest, that's a good thing. So either way, I'm happy. And the next biggest loser is a new one. It's called Phoenix Group's Holding. So it's actually one of the dividend stocks that I talked about in this video here. And because it's a dividend stock, I'm not too worried about this. I'm going to just continue investing into it, and hopefully it rises a little bit, and obviously I'm going to get that juicy dividend eventually. So yeah, not too worried about that. Overall, my portfolio is looking fairly green. I did do a bit of reallocation during the month, so I will talk about that later. However, I think we should just move on to the greens, the winners, because that's what you're all here for, really, isn't it? So let's start off with the biggest winner, which is actually Wells Fargo. This month we're up 47%, and I did actually sell a bit of this off because during my dividend pie I added some new companies, so it added those into it and withdrew, took a couple percent off Wells Fargo, so I sold a bit, but we're still up 47%, so that's nice. And then next we've got Walt Disney, which is also up 47%, and again, I took these out of my dividend pie because technically they're not paying dividends anymore, but they're still in my main portfolio, or my main get rich millionaire pie. So they continue staying there, and I'm continuing investing into Walt Disney because I love them as a company, and they are gonna completely wipe out Netflix, hopefully. I guess we'll have to wait and see. And then moving on to the old faithful, which is actually my VUSA S&P 500 ETF. So we're up 44%, up 2.7k, which is decent. Again, this is another one which I sort of took some profits from because of the way I reallocated my millionaire pie. So this is a sort of dramatic drop, but when I reallocated, I think I did it on a down day, so it's actually made the portfolio look fairly good. And then we have some honorable mentions. So we've got Alphabet, which is not really much in there, but it's doing pretty well. So that's obviously Google. Apple is up 28%. We love Apple. Bank of Montreal is up 36%, which, considering it's another dividend stock, we're loving that. IBM up 14%. FTSE 100 up 11%. What else have we got here? Roku up 23, Shopify up 21. So a lot of these ARK Invest ones are shooting up again. We like to see that. Well done, Cathie. Starbucks up 11%, Tesla 13%. Again, I took some profit there, so that's why that's come down a lot. So I think it was 20% last month. But I have cut down a fair bit of that because I took some profit and reinvested it back elsewhere. But yeah, that's about it. So it's looking fairly green across the whole thing. Now there's just a race to get to 20k of the portfolio, so you never know, by the end of this month it might be there, who knows. So now we can go into the pie. So as you can see, the 2x2 in ARK Invest pie is up 9.48%. So this is the one that I was talking about with Cathie Wood. This has not been reallocated. Oh, it might have been. I can't remember if I reallocated this one, but it's looking pretty good. We've got Tesla, Roku, Square, Alphabet, Zoom, PayPal, Apple, Shopify, Coinbase, Spotify, and Surface Oncology, the one that's letting us down. But again, it's only 2.5% of this actual pie, and the rest seem to be holding it up very nicely. So we'll take it. And then secondly, we've got our Pi Felicia pie, which is at £963, and we're up nearly 7%. So again, this is a dividend pie, so it's not going to be doing mad numbers in terms of return, but we've got nearly a 10% return in terms of actual dividends. Yes, 1%, what am I on about? 1%. So in here we've got the Vanguard FTSE All World High Dividend Yield, which is another one which I mentioned in my dividend video, which I'll put up here. And then we've got the Wisdom Quality Dividend, UK Dividend, Coca-Cola, AT&T, Verizon, another one I mentioned, ABBV, another one in that video, Unilever, IBM, Bank of Montreal, Starbucks, Wells Fargo, Legal & General, and Phoenix Group Holdings, which is the last one I mentioned in that video. So what I've done since last month is actually get rid of Southern Electric, because I've had an issue with them with my home, and they are really f***ing me off. Excuse my language, mum. So I've decided to remove all my money from investing in them because I literally cannot stand them. They have no idea what they're doing. They are billing people for stuff that makes no sense. They're sending bills with a debit amount and bills with a credit amount. It's ridiculous. So I refuse to put any money into SSE, because if you don't like the product and you don't like the customer service of a company, then why would you invest in them? And I'm taking that very seriously, because that is ruining their revenue possibilities, and it's just, I can't bring myself to invest in them. So yeah, SSE. You can tell that I'm pretty off about it, but yeah, anyway. So my Pi Felicia pie is looking pretty good. And then we go on to the main event here, which is the Slow and Steady Wins the Race Millionaire Pie. Obviously, I had to change the name. I know I said that every single time, but you might as well hear it again. So we're up £3,700 here, 26.5%. So looking good. £68 worth of dividends. We'll take that. So this has actually changed quite a lot, because the S&P 500 ETF was around 60%, now it's down to 50%, so I did sell off a fair bit and then buy back in all to the other things to sort of reallocate everything. So now we've got 50% being the S&P 500, 6% being FTSE 100, Walt Disney 5%, Amazon 5%, Apple 5%, and Tesla 5%. The S&P 5 UK dividend 5%, and the e-car electric vehicles ETF at 5%, and the rest is PayPal, Airbnb, Coca-Cola, Netflix, Wells Fargo, Legal & General, and Dolby Laboratories. Easy for me to say. So yeah, I didn't want to have a company over 5% in this main pie, because overall this will be my main sort of pie, so anything over 5% I think would be too much unless it's an ETF. So I'm trying to reduce my risk a little bit and focus on ETFs. So that's my reasoning there. So at the moment I'm investing, I think it's actually like 30 quid into the ARK Invest and maybe 25 into the Pi Felicia, just because I wanted to cut down just to save a bit more money for when I run away from my job, which is actually quite soon, so keep your eyes peeled for that. I'll probably only be focusing on the Slow and Steady Wins the Race, so I'll just put £150 in there every month after I leave my job. So I might have to reduce that just in case I need that extra money to pay my rent or something. So I'm just trying to keep as much cash as possible at the moment. But I'm hoping I can get my income up to sort of where I am now with what I'm going to be doing in the future. So hopefully I can do that and then invest a lot more, basically. So short-term holding back to hopefully be able to invest a lot more over the next few years, basically. So, but anyway, the overall portfolio is sitting at 19,500. So as I said, hopefully we'll get to that £2,000 mark by the end of this month. Who knows? But we're up 24 and a bit %. And it's looking good. It's looking good. Hopefully it continues like this. And yeah, I'd love to know your thoughts on this. Should I add something else? Is there anything that I'm missing? or is there anything that you know about these companies that I should be aware of and I should get out like I did with SSE? And yeah, that's about it really. Hope you've enjoyed this video. If you've got any value, please hit that like button, comment something, subscribe, do all those things. And if you do want a free share to stake or free trade or even some free Bitcoin at CoinBase, then the links will be in the description down below. I'm not a millionaire, but I'm trying to help you become one. So peace.